Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer, and with me today for a change is Hormaz Patakia. Welcome to the show, Hormaz. Good to have you beside me. Quite a lot happening on the show, but it's a Friday. We're actually seeing quite a lot of red on the screen and mainly dominated by weak global cues, right?
It's not a Friday that the bulls were hoping for, but of course we still have a couple of hours left for the day to end and the week to end, of course, more importantly. Let's get to the headlines straight away. Stocks have taken a dive following a sell-off in US equities as macro concerns rise. Metals and auto, along with realty, are the biggest drags. Mid-caps relatively fare better.
Zomato fires on all cylinders with strong profitable growth in food delivery, faster ramp-up of Blinkit, with an eye on profitability and the planned launch of a going-out app. District brokerages also issue bullish calls on the stock.
Cummins India declines on the back of negative commentary from the company's global parent. Cummins Inc. says that the revenue for its 7 entities in India, including 3 joint ventures, saw a 10% decline year-on-year.
Nifty IT under pressure, corrects over 1.5%. Mid-cap companies such as Mphasis, Birlasoft and Oracle Financial lose between 1.5% to 5% in trade.
And shares of TTK Prestige rise after the company approves a 200 crore rupee share buyback. The buyback price of 1,200 rupees a share is a 25% premium to the closing price from Thursday.
Well, welcome to Midcap Radar. It's a show where we actually focus on the mid-caps, but today, when you're looking at the screen, quite a lot of volatility and quite a lot of selling pressure, especially amongst the large cap names. If you could pick out some of the stocks, from the auto space, have a look at names like Maruti, Hero Motor, Eicher Motor. All of these stocks seeing quite a bit of selling pressure in the session, and the entire IT pack, names like Mphasis, Oracle Financial, something that we just alluded to earlier, all of them doing quite badly. Hormaz, anything caught your eye?
No, auto, as you just mentioned, Eicher at the start of the 1 o'clock show, the Eicher was down around 4.5%, and now it has extended its losses. Now it's down 5.5%. Now at the lowest point of the day, the top loser on the index and the top 3 losers on the index continue to be auto stocks, Eicher, Maruti and Tata Motors, followed by metal names, Tata Steel, JSW Steel. Of course, TCS has now made an appearance there, as Vivek was mentioning about IT stocks. Now TCS is down almost 3%, but the broader markets are not doing particularly well for themselves either. The mid-cap index is now down 0.6%. The small-cap index is down 0.5%. Not as much compared to the others, but the losses, the realty index now has extended its losses. Now 3.5% lower is the realty index. The auto index, as Vivek was mentioning, down 2.5% as well, followed by the metals and the IT stocks. But plenty of movers in the broader markets, and today Vamakshi is joining us to take us through the mid-cap movers this afternoon.
Well, absolutely, Hormaz. There's red across the screen, and from the mid-cap space especially, we're seeing pain in a lot of these counters. Let's look at first Cummins, that has fallen by almost 7.5%. As you said, after commentary that came through from the global parent. We also have Escorts Kubota, which has declined by almost 6% now. Birlasoft has declined for the second consecutive day after reporting a weak set in the quarter gone by, down nearly 5%. As you can see, Prestige Estates and Titagarh Rail Systems are some other top losers in the trading session today. Let's also look at the realty index. Like you rightly mentioned, Hormaz, the realty index is seeing a lot of pain. Macrotech Developers is down nearly 4%. Sobha and Brigade Enterprises is also down somewhere around 4%. There are also a couple of counters, on the other hand, that are reacting to its numbers. Let's look at Zomato. That stock has surged to a record high today, up nearly 11.5% today. Ixigo is also reacting to a strong set of numbers, up nearly 4.1%. Pratap Snacks, Triveni Engineering and Repco Home reacting negatively, down nearly anywhere between 2 to 5%. Lastly, let's in such a weak market, we also have a couple of stocks that are gaining momentum. We have BKG, which is up nearly 7%. Adani Wilmar reacting to the FMCG business demerger news. That stock is also surging high by almost 8%. Info Edge and Ramkrishna Forging are some of the other gainers.
Vamakshi, thanks a lot for that. Plenty of movers in the broader market, some of them bucking the trend as well. Good time to get in Hemain Kapadia of KR Choksi for a technical check on the markets. Hemain, good afternoon. Thank you for joining in. Well, if you can say the law of averages are finally catching up with the index. Now, do you see some reversal from 24,700 or do you see further downside?
A very good afternoon, Norman. Thank you for having me on the show. Always a pleasure. Yes, the laws of averages and the laws of gravity both catching up with the market finally. Having said that, it doesn't look as if things could get majorly negative unless we close below 24,600. The bank Nifty continues to flounder. If till it doesn't participate, I don't think 25,000 gets taken out decisively. Reliance is also on a small hiatus. So the VIX is around 14. That's not much of a concern. Above 15, I guess that would be a problem. But ideally, below 13 would have been more conducive for everything. So we're tired, we're overbought, and we're taking a small breather. Nothing much to read in it currently. IT, I think Vivek mentioned. IT, how you mentioned, IT is looking toppish. The index has indicated sell signals on the daily chart, and whether it's Birla Soft, okay, but even something like an Infosys and HCL Tech are getting top heavy. So IT is that we could be okay. We remain safely ensconced in a longer term uptrend, but currently IT seems to be facing heavy weather, and we could see some further cool off coming in Hormuz.
That's right. So when you're talking about numbers that came in from Cognizant, also that weren't there wasn't any incremental positives that came in there. That along with the weak overnight news leading to quite a bit of a sell-off. But welcome to the show, Heyman. Heyman, any individual stocks on the radar?
Yes, I think. Hi Vivek, thank you for having me. Despite certain things being corrected, but I mean sectoral musical chairs that go on from time to time, there are a couple of stocks which look interesting. The first one is MCX, Vivek. We've broken out of what has probably been a 16-week sideways consolidation. I'm saying we've broken out because I'm basing it on a weekly pattern, and today is the last day of the week, so the weekly charts are ending. So that would validate a weekly breakout. So a buy on MCX at 43.60, stop loss of 42.60, target of 4560. I believe it would get overshot because a 16-week consolidation is not exactly approx 16-week consolidation, not exactly small, and we should gravitate slowly towards 48 and maybe 5,000, but that's more of a 6 to 8 week sort of point of view. And the other stock which looks interesting is Mahindra and Mahindra Finance. M&M Financial Services looks quite interesting. We've corrected, it's underperformed, and now it's seems set to start the next leg of its move. 5 weeks of a time price retracement. Things are beginning to look up, even on the longer term charts. Okay, 320 is a bugbear of sorts, but after almost, let's say 1.5 years, 1 year, we're seeing the stock beginning to look good. So one can buy M&M Financial Service at 305, stop loss 290, target 335. It's a short-term trading call. I believe a few months down the line, this stock would most probably post a fresh all-time high, Vivek.
A quick word on Zomato as well. Heyman, if you can, 11% higher now. What's your call there?
Well, frankly speaking, I've always advised ordering on Zomato. I do order regularly, but absolutely. I think all-time high, clear blue skies, no non-resistance levels. But after such a move and a gap up opening, I would try to be more conservative, wait for the gap to get fulfilled and then go long.
Thank you so much for your time, Heyman, and thank you so much for your views. Let's now slip into a short break. When we return, we'll be joined by the management of Suryoday Small Finance Bank to discuss the quarter gone by. Stay tuned.
Back with us here on Midcap Radar, the markets continue to remain near the lowest point of the day, but shifting focus to some corporate conversations now. Suryoday Small Finance Bank is the one in focus. Their slippages for Q1 have surged by 22%. Now, the write-offs are also elevated, which has aided the rise in the NPAs as well. Now, Mr. Bhaskar Babu Ramachandran, the MD and CEO of Suryoday Small Finance Bank, is joining us this afternoon. Mr. Ramachandran, good afternoon. Thank you so much for joining in. I'd like to start off by asking you about the factors behind these slippages, if you can attribute some reasons as to what has led to these elevated slippages, and do you see them normalizing as you go forward in FY25?
Yeah, we had a pretty good quarter. There has been seasonal slippages, which keeps happening in the first quarter. There has been other reasons like elections and heat wave that are part. But we see that normalizing, we see that improvement month on month. I think July was happened to be much better than June. I think they'll get normalized to the regular course during the remaining quarters.
Okay. Going forward, how do you see number one, recoveries panning out? Number two, your current NIMs are a little over 10%. Can you sustain NIMs at these levels? Rest of FY25, how do you see NIMs panning out? And separately, where do you see cost of funds? A lot of players have actually been grappling with higher cost of funds as well.
The cost of funds has marginally gone up compared to the previous quarter, has gone up by 20 bips. We see that probably tapering off at this level and marginally come down over the next quarters, few quarters. But our overall cost of borrowings funds will remain closer to around 8% for the remaining of the quarters.
And on NIMs?
NIMs is at 10% at this point of time. As we balance the portfolio towards more secure, the NIMs will moderate down by a couple of basis points. But the fact is that the cost of operations as well will come down on the secured loans over a period of time. But the profitability will be intact, but from 10 it can moderate down by a couple of basis points as we shift the portfolio from 60% unsecured, 40% secure to closer to 50-50 over the next couple of quarters.
And what would be the quantum by which we will expect them to moderate? And also a word on the loan growth outlook that you have. And eventually you said the mix will be 50-50 for secured versus unsecured, right?
That's right. So even though the 50% secured, it's fully credit insured by the CGFMU. So to that extent, it is not completely open unsecured from a portfolio risk management point of view. So, but ideally, this is a mix that we will kind of go towards. While we go towards 50-50, the 10, other things remain the same, will moderate down to probably around 9.5-9%. Max would be in the 9% range.
Mr. Ramachandran, there have been fears of over-leveraging of customers within the microfinance space, the MFI institutions. There is a fear that there are 6 to 8 loans being given out to a single customer. What's your view there? Have you faced any such concerns?
Yeah, there has been reasonable overheating across the sector, predominantly because of whatever last year, there has been a little excessive growth. But to each one have their own risk management. So what we currently do not fund anything where the customer has exposure to more than 4 entities, including ours. So, but it's time to relook at it. But more than 50% of our portfolio is to individuals who have graduated. To that extent, you underwrite them on an individual basis. So that portfolio is intact. It isn't really showing any signs of stress. But on the group lending portfolio, there has been a marginal slippages. For instance, the current bucket collections used to be 99.5. It's now kind of come down to very close to 99 or even stepping a little less than 99. So we'll have to be very cautious in terms of each one will have to do their own. MFIN has guided in terms of the guardrails, but beyond the guardrails, it's each one, depending on the markets. Certain markets are overheated. There has been excessive growth in the last couple of years. So we'll have to be very careful in terms of how you play your micro geographies to wherever you're present.
You've spoken about as far as asset quality is concerned. Would you be able to quantify it, number one, in terms of, where do you expect to see GNPA trend and where do you expect to see the net NPA trend as well? You've given a guidance for NIMs to moderate from the current 10%, and as the book revenue mix changes, you expect it to moderate between the 9 to 9.5%. Did we get that correct?
Perfect.
Right. And a word on as far as asset quality is concerned, how do you expect to see the gross and net NPAs pan out?
See, gross currently for us, while it is 2.7, we expect it to be closer to around 2.5 at the end of the year. On the net, we are currently at 0.4. We'll continue to have a PCR of closer to around 80%. We are currently at around a little higher than 80. We'll continue to at 80, and the net NPA will be hovering in the same range between 0.4 to 0.6 at best.
Mr. Ramachandran, there has been a lot of talk about stress in the rural economy, and if you can say, you just mentioned that these were seasonal slippages that you had. Were they from the rural side of rural scheme of things? And if you can also tell us how much percentage of your book is exposed to the rural part of the country and your outlook on the same?
So we are predominantly a semi-urban player. So, but around the semi-urban towns, you get 2 kilometers away, you get into the rural patches. So to the extent of exposure to rural is around closer to around 40% of the microfinance portfolio, which constitutes around 50% of our overall book. So net is around 20% exposure is what we have to the rural microfinance segment at this point.
Mr. Ramachandran, a word as far as return on assets are concerned. How do you see that panning out for FY25? And as the mix changes, how do you see it panning out over FY26 as well?
So we are looking at ROE of around 14 to 16%. Currently, we are at 15. It will kind of range up marginally quarter on quarter, likely to close the year with around 16% in terms of return on equity. So ROA and leverage are kind of interlinked. To the extent currently we are at around 2.3. We'll stay in the range of around 2.3, 2.5.
One final question, Mr. Ramachandran, from my end. I want to go back to that rural economy bit. Are you seeing some bit of stress in your rural portfolio as well? And do you see that increasing or normalizing as the year goes by?
So we haven't seen anything specific, which is more overall across, as I said, that there has been a slippage of around 100 basis points in terms of current bucket collections, which really reflects in the way it spills over into GNP, at least the inclusive finance segment. So we aren't seeing anything substantially higher in rural and less in urban. Broadly, it has been 1% across. But in specific geographies, in specific states like Gujarat at this point of time, we are seeing an elevated stress than we have ever seen in the last 4 years.
Oh, that's a little concerning, sir. Mr. Ramachandran, give us a sense and quantify the impact for us. RBI has come out with draft norms as far as liquidity coverage ratio is concerned. Would you be able to quantify the kind of impact that it will have on you?
So currently we're at say 170, 165, 170%. It will come down if the new draft norms become the norms by around 25 to 30%. Still will be at around 135, 140, which is well above the regulatory requirement of around 100%. So, but you need to maintain that, continue to maintain that. In the normal course, probably would have thought about moderating it to 150, 140%. Now, with the new norms were to come in, we'll have to continue to be at current 170, which with the new norms will come down to 130%.
All right, Mr. Ramachandran, thanks a lot for sparing time and joining us this afternoon to talk about the quarter gone by as well as for the road ahead for your company, the management there of Suryoday Small Finance Bank. The stock has seen a bit of a spike as the management spoke, now currently almost 0.8% higher, closer to levels of 200. Time for a short break here on Midcap Radar. On the other side, we focus on some stocks that are buzzing in reaction to their first quarter performance. Stay tuned, back on the other side.
Welcome back to Midcap Radar. Well, markets continue to remain under pressure, but there has been a bit of a recovery, especially if you're looking at the mid-cap end of the market, the broader end of the market. But one particular stock that we're tracking is Newland Labs. The stock is surging in trade, reacting to its strong Q1 results. Ekta joins us now to take us through the management commentary in the conference call.
Thanks for that. Well, yes, Newland Labs came out with what was a very strong set of numbers, but the management did try and clarify to the analysts in the conference call that this quarter, in fact, is not an indication of the full year performance. They continue to focus on productivity, and this quarter, the profit also included an exceptional item of around 20 odd crores. But otherwise, there were some parameters such as the free cash flow, which looked good. So FCF was around 51 odd crores. They've repaid some part of their debt to the tune of around 9 crores this quarter. But overall, FY25, they expect it to be a year of consolidation. They will be making investments based on suitable opportunities and risk-return metrics. They expect the businesses to see more momentum in FY26. They're cautiously optimistic on the business at this point in time, and they're positioning themselves as a pure-play API company. So the overall takeaway was that, yes, while Q1 was good, one cannot probably extrapolate it to the other quarters. It could be a year of consolidation for FY25 with momentum building up in FY26.
Ekta, thanks a lot for that. Stock almost at the highest point of the day now, 15% higher is Newland Laboratories. Numbers of CAMS also flashing on your screen, a 42% jump in its net profit at around 100 crores. The EBITDA has also seen a slight bit of an uptick as well. The stock, though, is slightly wobbly at this point of time, but the stock has seen quite a bit of an uptick in recent times, 64% higher so far in 2024. But the other stock that's doing well after results is PSP Projects. Vivek, tell us more on that.
Well, I've been tracking this company for a while, and PSP Projects came out with a set of results. Seems to be a good set of numbers, on the face of it. Remember, Q1 for most infra companies has been impacted by, very strong summer season. There's also been some execution-related worries on the back of labor unavailability, and also ordering activity has been quite subdued. Now, in that, with that, keeping that in mind, look at the revenues, high by almost 21%, EBITDA high by 12%, margins too, coming in quite strong at 11.9%. Profitability is down 8%, but keep in mind other income component, at 3.8 crore versus 5.7 crore. So the other income has actually dropped, leading to a slight drop as far as the profitability is concerned. The details aren't out yet. The management will host a conference call at 5 p.m. today. So some more details will come in terms of the order book book and order inflow. At the end of March 24, the company had an order book in close to 6,050 crore, and the FY24 order inflow was close to 3,500 crore. The guidance, company expects to see orders worth 3,500 crore in FY25, and the revenue growth target is at 15%. So Hormaz, important to watch whether they retain, the revenue growth guidance and the order inflow guidance, and that'll be something that the street will be looking out for.
The street will be looking out for that indeed, Vivek. Thanks a lot for that update. But let me end with some good news then. The numbers are out and it is final. India watched Budget 2024 with CNBC-TV18. CNBC-TV18's dominance continues as it knocks out the competition on Budget Day. Now, CNBC-TV18 is the clear number one with 91.2% viewership during Budget Day.
Yes, in fact, continuing its 25 years of leadership, CNBC-TV18 wins another gold on Budget Day. Thank you, viewers, for your consistent patronage, trust, and continued support.